Hello, everybody. Happy Monday and welcome to Chart Request Live. I am your host, Sam Gatland, and I am joined by my esteemed colleague, Mr. Jason Pers. How are you doing?
Good, man. Excited to talk through some charts. A lot happening in the markets today. So it's a fun one. I just think too many people are looking at this whole thing like it's the end of the world. It's really like there's opportunities out here. So let's look through some of those, get some of your guys' charts, and let's go through them. Excited to do it today. I can't hear Sam. Is just me. Okay.
Sorry, am I
Sam, I can hear you now.
cool? Cool. Sorry about that. Yeah, so this VIX has my attention, making new multi-month highs here, breaking out above this 38.2 retracement level. It looks like volatility very well could spike up to where it was on August 5th, that yin yo-yo day. What do you think about volatility right now, Jason?
Yeah, so we run a model, and Sam and I were talking about this before, where basically it's kind of a low volatility to high volatility system. And the one thing you have to always think about the VIX is that it is a mean reverting product. So you're always going to see it kind of go back to the mean. So you go back to August 2024, and what you're seeing there is that huge peak. That huge peak happened because of the yen carry trade. There's a million reasons. We can all say a bunch of reasons in hindsight. But really, what really happens is the VIX goes down at some point and very quickly. So it's a really hard thing to trade here, which we are moving to the upside. It could make a move higher. I'm not doubting that. I'm just saying at some point the bigger move's going to happen down than up,
For sure.
and the more predictable move per se. So I do like the idea of being long volatility because I think it's a great hedge in your portfolio. Just to have a system that, hey, I'm squeezing here, I get a nice breakout. Like we had the trade in 2024, which was awesome. Really helped with that volatile period. And then today it's a nice trade to just be in. But however, I think the thing to think about here is when does this thing start to come down? And I think it'll probably happen pretty soon.
Do you think that's going to require the S&P to reclaim this critical level of interest? You can see that this was the peak in July, and then we gapped above it in September, flipped it into support on numerous occasions, and here we are decisively breaking below it, flirting with a new oversold reading. Not looking
Yeah.
good for the S&P 500.
No, it is not. And I do not have a position in the S&P 500. I do not have a position in technology even anymore. All of these things got killed in the last few weeks, and all the trends with so. But the thing to say about the Qs trade, we were in it for 2 years. It's a great 2 year trade. Awesome trend. Beautiful trend there. Going back to what was that? January 2023. We got that breakout. As you're seeing Sam highlight right there, the breakout zone, and it's moved, quite a bit. So basically looking at it, just kind of hitting that low. Now we're getting stopped out of the move. It's been a great trade. So I'm not hating on it by any means. I'm just saying, I'm not in it today. And then the S&P 500, same thing. Not in it today. I wouldn't touch it. It has too much technology in it at the moment. If you're bearish on technology, you should be bearish on the S&P 500. But I do think a bounce is coming for these things. I think this is a great time to sell options premium. We did a put call, a put spread to sell options premium the other week on the S&P 500. Even though it started to come our direction, it still is making money because that's how much volatility is in the market right now. So as volatility is coming out, even the moves going against us, we're still making money. It's kind of like on the opposite side, if you ever have traded earnings. If you're trading earnings and you buy a call option for earnings and you think the stock will go up for earnings, and then next thing you know, stock does go up, but you didn't make any money. And the reason is because that volatility has dropped out because of that event risk. So I think now is a great time to sell premium because we have so much volatility in the market. There's no place for it to go but down at some point, and it will happen at some point soon because volatility is mean reverting. So I think it's a good time to sell options premium. I wouldn't buy naked puts by any means because I think you could get killed with those at the moment. It's just in too much of a downtrend to even play that game. but I think a put spread, something with a hedged risk, something that doesn't, it's not going to make you all the money in the world, but it will make you some money. I think that's a great way to play this right now.
For sure, and that's what you hear our options trader at All Star Charts, Sean McLaughlin, talking about nonstop. Really, right now, is he wants a well-defined level of support to sell some puts against, and then he's often selling the calls against it as well, and just betting on some type of range holding and extracting the volatility from the market.
Yes.
It seems to be the move, Jason.
It is the move right now. It's not the thing that's going to make you all the money in the world. It'll make you a couple bucks. A lot of people, they focus on wishing they were short, where it's, what's the trade in front of you? And the trade in front of you is to sell some premium.
For sure. And in crypto land, the Solana has my attention. I mean, look at this chart. If this is a top, I mean, look out below. I think that this crypto cycle could get much, much uglier. Solana is one of the largest out there, and it looks, I think this is like home builders of the stock market. If you lose home builders, things are probably going to get a lot worse. It hasn't happened yet, but they're still right there at the lower bounds of this potential distribution pattern. We've carved out this potential left shoulder. Here's a head, and maybe we're just going to carve out some type of right
home builders
shoulder.
are up today. Is that what we're looking at?
Yeah.
So that's interesting.
Yeah, for sure. Yeah. So a lot of these really bearish charts aren't resolving lower. So I think that's kind of what the bulls are hoping, is that these support levels hold, but boy, that has not been the case for the S&P.
No.
Anyways, Jason, let's get into the mailbag.
Very tech heavy. Let's do it.
What do we have, Jason?
Oh, tech bag. Oh, the mailbag. Sorry, guys. I'm the one who's doing that. I'm the one who's messing that up. So my bad.
Bro. Come on.
Sorry, guys.
Give it to me.
It's been a day. It's been a day, Sam. It's been a day. Okay. Let's bring up Slack. 5 seconds. Okay. So mailbag.
We've got a few people in the chat on YouTube. We've got Wavy McFly hanging out with us. I see you, Alex, Niaz, Alexander, Mr. Zerby. I appreciate y'all being here.
So CSGP, 3-month time frame.
So this is CoStar Group. This is a, let's see, $34 billion software stock. And it looks like they're in the provision of online real estate marketplaces. So it's like a real estate tech stock. That's kind of interesting. This one has been a pretty big winner. I think you can benchmark this to the S&P 500 and see that this one has had quite a bit of outperformance since the great financial crisis. It rallied about 1,000% relative to the S&P, but boy, has that changed recently. I'm looking at a potential, let's see, this is like an 8-year distribution pattern that it's flirting with, but not completing. It's digging in at this key level of interest and screaming higher this month. So I like that. You have a clear line where you can say you're wrong about this one and you can get out. And then in absolute terms here, you have a pretty nice base shaping up here. It's hard to get involved right now as it's just in the middle of the range, but I do see something shaping up here. Let's see if we can fib it out. Yeah, so this 61.8 retracement really is the level to trade against. You can see that's been an important one many occasions. Right now, it's serving as resistance. A breakout above that 81.5 level, I think, would open the door to $100. So that could be a pretty quick 20-point move, or 25%. So yeah, this one looks pretty nice. I think that's really all you'll get out of it with a 3 to 6 month time frame. I don't think this one's going to break out to new all-time highs within that time frame.
Yeah, I think the the other thing to say about this is a weekly chart. That might be a 100-day high. That could be a 52-week high it just tapped.
For sure.
Uh,
This is the highest price in almost 200 trading days.
yeah, so
195.
we got 200 days. I mean, that's 40 weeks. That's a long time. So we're looking at that. It's above the is that the VWAP from the high?
Yeah,
Um,
it is above there
So,
for
so
sure.
there's a lot of things to be kind of bullish about this stock on, and not to mention it's an outperforming real estate stock since 2008 is probably something that should be on people's radar.
For sure.
That's something that's very rare. You won't see it much in the real estate space. So, you're kind of seeing an outperforming real estate stock. It kind of fell out of favor in 2020 when technology really started to make a move. Obviously, it's not even outperform. It wasn't even outperforming the XLRE, which is the real estate ETF. But now it is. Now it's starting to. Now it's carved out a nice bottom, which happened last year in October, and now it's just kind of making a nice smiley face and moving higher. I like this stock. I think it's a really, really cool one.
For sure. Yeah. Real estate tech is very interesting. There's not a lot of competitors in that space.
Yeah.
Let's move on. Jason, what do you say? Wavy McFly is wanting to look at the Kroger.
Yes.
So
That was all I got from our email list. So we're gonna go, and if you guys have any charts, feel free to write in. We need your guys' help today, so please write in. Let us know what you guys want to take a look at.
For sure. Do you shop at the Kroger store, Jason? I
Of
am a
course I
frequent
do.
there.
I am in Columbus, Ohio, so absolutely.
My Kroger has the best fried chicken in town. I'm
Yes.
telling you. I am a frequent there. It's very good. um,
It's very black of you, Sam. I like it.
Hey, I'm not afraid.
No, fried chicken. Everybody likes fried chicken. Let's be honest. Fried chicken's great. Haven't ate it in years, sadly. It's hard as you get older, where you got to cut out all this stupid stuff, and you're like, yeah, I can't eat fried chicken. It's the worst thing in the world. But no, Kroger's great. Great. It's been a great business for years. Great company. Always innovative. They're never stagnant. I've always really liked that brand. I'm speaking about it like I really like it, and the reason is it's been in my long-term portfolio. It's one of the ones you guys know. There's a few that I hold long-term that I really don't talk about much because that's not what I do in the fund. But this is one of them that I've held long-term for a long time.
Same here, actually, Jason. My dad used to be a pharmacist for them, so we got some like employee stock grants, and we've held them for years now. Multi-baggers in that. So Kroger, since that 2017 low, is up about 250%, and it is also resolving some type of base on base formation. It's a very bullish formation. This just screams accumulation, and to see the resolution out of this base come on the heels of an earnings event with mixed results just tells you there's this stock. It wants to go higher, and you can see that it's rallied 10.5% since that earnings event, which was last Wednesday. So this is really a sweet setup. Wavy McFly mentioned in the chat that he was looking at $80 as a potential level of interest. I think this is how Wavy has his chart marked up. He's probably looking at this Fibonacci extension level from this prior drawdown.
Yeah. Wavy knows the charts, and that's a great target to have. But this is one, like, I think also you could just run a trend following model on this thing and kind of sit on your hands, because this is one that it could really move. Has a lot of reasons to be bullish on it. They also have a lot of farms. Their brand, Simple Truth, that's their own farming brand. Like they can keep their costs pretty low for a lot of reasons. Even in an inflationary cycle, they can obviously consumer staples do their best in a deflationary cycle. So it's like you can own this thing in a bunch of different environments, and it should continue to make you some money.
For sure, Jason. And look at this setup here. So this is Kroger relative to the XLP, which is the consumer staples sector of the S&P 500. And while it's not like a Kellogg's, they're not actually, well, I guess they are actually manufacturing these consumer staples. It's a very consumer staple-ish type stock. And if we're in kind of a bearish tape like we have been in the stock market, and consumer staples are sure going to be catching a bid. And Kroger is leading the consumer staples. It's flirting with a breakout, a multi-decade breakout in relative terms. So
and what's interesting, if you go back to their earnings reports, they're the only ones who they're not talking very much about tariffs. They're not talking very much about their costs going up. They're not talking about any of those things because it's not affecting them in the same way some of the other companies it is affecting them. Walmart, for example, the more you're an international brand, the more you're going to be hurt going forward. So I like Kroger for a lot of reasons here.
For sure. Let's move on. Alex is asking about Oscar. Let's pull up Oscar Health. So this is a $3.5 billion managed health company. Looks like they're in the health insurance business, and I believe they're more geared towards like Medicare Advantage, that kind of scam. And fun fact also, Jared Kushner's brother was the co-founder of this company, so that's kind of fun. Anyways, you have a pretty massive drawdown here. You fell 94.5% in a matter of about 2 years in the Oscar Health, and then it quickly reversed higher once 2023 came around, and Oscar Health is now up about 700% since then. So this has been a leader in the managed health business, but as you can see, it's really stalled out here over the last year. I think we were talking about this on Short Request Live last week, and we outlined these anchored VWAPs from the all-time low and the all-time high coming in right around this $13 level. I think that is the ideal entry. You're betting on this not being a top. Buyers are going to step in, take this one back towards that 37 level. So yeah, I think you could also trade it against this 15.5 level, this Fibonacci retracement, with a target of that 24 level or 23.75, just the upper bounds of this range. And then there's another trade from there. If you break out, you could sell this one at 37, but that's how I'm seeing the Oscar Health. What about you, Jason?
No, same, Sam. There's no difference for me. It's just I like this flag setup here. And the one thing to kind of keep in mind about IPOs, another way to play it is either new highs. Like if this takes out that old IPO high, that's a great one. Sam's looking at it taking out the IPO VWAP. That's another good one. So there's a bunch of ways to tactically trade this thing. But I think if you're looking at it today, looking at it getting above those levels or breaking to new highs, like new 52-week highs, not all-time highs, I think it's an easy way of playing this one.
For sure, Jason. Let's move on to Hun. Alex is asking about Honeywell. So this is one of the largest aerospace and defense stocks in the world. It's $140 billion. They do a lot in the military industrial complex, headquartered in North Carolina. This is a massive company, and let's also look at it relative to the S&P 500. So in relative terms, this one is at the same level it was back in like 1970. So this one has not been a long-term outperformer. Granted, it's had its times to shine, but it has not stuck. And in absolute terms, since, let's see, this one went public back in 1962, made its all-time low in 1970, It's rallied like 9,000% since then. So this one hasn't really been that great.
9,000, nothing that great.
I mean, a lot of stocks, like you'll see like 100,000%. Like,
yeah, the compounding
so
isn't quite there.
Yeah, of course, it's hard to complain about 9,000%. But also you have to consider that took 50 years to get. So there's a lot of opportunity cost there. You have underperformed the S&P 500 if you've owned this stock that entire time. But nonetheless, it's setting up pretty nicely here. I think the trade is to buy the breakout to new all-time highs above this 237 level. I think you could call it 240 just to be a little bit conservative and ensure that the breakout is real. You can see that in November 2024, the bulls kind of swept new all-time highs, but were quickly rejected. So you can imagine that once you get back up here, all these bag holders from the last cycle will be absorbed and it'll be ready to make new all-time highs. But I think you want to give this one a little bit more time to shape up. But I do like it, Alexander.
No, I like this one, but it's always if you're really trying to ride a big trend and kind of sit in something, there's nothing wrong with like wait. I think a lot of traders like look at like a 10% move or a 20% move, like, oh, I missed the move. And it's like, no, like you could wait for this thing to hit new highs and literally then it's really going to take off. Or you could try to hope that it hits those highs and continues to go. And that's just not how markets usually work. So sitting on your hands, waiting for the breakout zone that Sam's talking about, I think that's the trade here.
For sure. Are you telling me that hope is not a great investment strategy?
Hope is not a good investment strategy, Sam. But that's the thing. It's how a lot of people trade, and they don't know that. First off, somebody would look at this and go, okay, it's over this fib. It's gonna hit those highs. I'll trade it like a range, and then it hits the top of the range, and then they're like, oh, I think it's gonna break out, and then they hope it's gonna break out, and then they hope it keeps going. And they have no idea what exactly they're doing. The idea that I'm laying down here is not about talking down to people. It's about understanding what you're trading before you ever get into the trade. If you're buying something today, you need to know exactly where you're getting out. Today, the trade is I'm going to trade this range. I'm going to buy it here. It gets to the top of the range. I'm going to sell this thing. So that's one trade. The other trade is when it breaks out above that upside and there's no resistance up there, then I'm going to buy that trade. And so and I'm going to get out with either a trailing stop or I'm going to hit my next fib target, something. But you have to trade it that way. It's the only way you can trade well. If you jump around and you have different strategies within a trade, it just doesn't work. Just understand they're two different things. And you could do both. You could trade the top of the range. You could sell it here. You could go, okay, cool. I hit the top of this range. I sold it. And then you could buy it where Sam's breakout point is. And then you could go, okay, now I'm going to buy it after it breaks out to the upside. Two different trades. Plenty of money to be made on both of them.
For sure. Just comes down to understanding your time frame, your risk preferences. I think that's very important.
Yes.
Let's get to one last ticker here, Jason. And if you are in the chat and didn't get your ticker selected, please do not hesitate to email us at questions@stockmarketmedia.com. Get your ticker included in our mailbag, and we will be sure to chart it out for you next Thursday on the next episode of Chart Request Live. But let's finish up with VRN. This one's coming from Mr. Zerby. Shout out Mr. Zerby. He's a regular around here. He's looking at energy. This is Veren. I'm not sure if I'm saying that right. $3.5 billion integrated oil and gas stock. Looks like they are Canadian. Canadian, eh? And let's start with VRN relative to the XLE. And you can see that this one has been a pretty big loser relative to the XLE. From peak to trough, this one fell like 97% relative to the XLE. So this is not a great look. But I think if you want to be bullish this, you could say something like this was a valid top. Sellers reaffirmed that right here in late December, early January. They retested the top and failed miserably. But here you are coming back to life, scooping and scoring above that level and turning this into a failed distribution pattern, which could result in some mean reversion towards the upper bounds of this range. And it could happen pretty fast. So I like where your head's at, Mr. Zerby. And here you have a very similar setup in absolute terms. A very well-defined level of interest to trade against. Let's call it the upper bounds is $6. So if VRN can scoop and score back above $6, then it's probably heading back towards, let's see, at least this $9 level, and you're potentially talking about this like $11. So that could be close to a double in a relatively short amount of time. What do you think about this chart, Jason? There's a lot that look like this in energy right now.
Oh man, energy has been a tough area. You know, speaking of Canadian energy stocks, I sold my last one last year, CNQ. I haven't seen enough strength to really get interested in Canadian energy for a while, but I am seeing some promising signs. Last week we did see some outperformance in that sector. But once again, it's just going to be a very tough one and all very dependent on what Sam's showing you here, which is oil. Oil is always going to be key in this setup, and oil is under a lot of pressure right now. And as long as oil's under a lot of pressure, I don't want to be continuing to buy energy or look in that area just yet. But I do think at some point oil's going to come into play, something that Sam and I were just talking about earlier. I have a show that Sam and I are on every Monday at 11 a.m., the Commodity Report, and we were talking about the fact that oil, or basically the market in general, could go under a deflationary shock for a minute, which would send oil lower. However, over the long run, we do think oil is probably headed a lot higher, but that's a long run setup. For now, you sit trading what's in front of you. This could be a breakdown pattern. So I'd continue to watch those levels. What level do you think everybody should be watching for, Sam, on this to take that sell signal?
It's really, I think if you want a decisive signal, $60 is the level. But you could start building positions below 65, something like that. It just depends on how you like to trade. But really, for me, I like to look at the crude oil chart upside down because I'm very biased. And when you take the bias out of it, it's impossible to say you're bearish on this chart, which is the crude oil inverted. So I'm bearish on crude oil. This is a very inherently bearish pattern, and it's happened over a very long time frame. This is a weekly chart going back to early 2022. The bottom was around the war in Ukraine's beginning. So I think that's a very interesting market to watch right now. And I'm biased towards the short side, to be honest, which I'm not really happy about. Like, I'd rather be buying energy stocks. You know, these.
I think it makes sense. It makes sense.
Scream higher.
You know, flip the chart back up the right way one more time, and I want to show everybody a pattern. So there's a pattern that's very popular in trading. Well, it used to be probably 50 years ago. So I read book. I'm not that old, but I read a lot of older books when I was trading. So I learned from a lot of older people, and one of those patterns was called the fallen angel pattern. Meaning you've seen it in Bitcoin going back to after 2017 and through 2018. You've seen it a million times. You just don't keep it in your head much because a lot of people forget about it. And what the fallen angel pattern means is that you see it hit a high. It tries to hit that high again. It can't hit it. Then it goes into a downtrend. Then it tries again. Can't get anywhere near it. Lower highs, lower highs, lower highs, but holding that support pattern. Usually those break down, and they break down pretty heavily at some point. That's usually when you want to buy those things, after you see that breakdown. So that's part of the reason why my thesis is more, hey, short term, I agree with Sam. Short it. You got to trade what's in front of you. long term, I think we're going to see this nasty shakeout, possibly in oil, where we get oil down to $50 or something like that. And then next thing you know, it's going to start to go sideways, and that's when we'll probably see the oil rally. So I think the fallen angel pattern is really the thing to keep looking at here. Look for that to target the downside just a bit, 50, 45. I'd be honestly surprised to see oil under $50 in this type of inflationary environment. I would be really, really surprised. But anything can happen. It doesn't matter what I think or say. This is what the chart is saying. That's why Sam flipped over the chart to show you guys. It is bearish. It is very bearish. I think copper is moving up. I see gold moving. I think that commodity cycle usually ends with oil starting to follow these things, but it's not doing it just yet. So I think to just be objective, short oil when you get the signal, go long oil when you get the signal.
I love it, Jason. Let's leave it here for the day. I want to thank everybody for being here. Wavy McFly, always here. Alex, Yaz, Mr. Zerby. I really appreciate you all being here. And I'm sorry if we didn't chart out your ticker. Please do not hesitate to email questions at stockmarketmedia.com, and we'll be sure to chart your ticker in the next episode of Chart Request Live, right here in the same place on Thursday. And Jason, thank you for joining me today.
Of course.
This was a blast.
Yeah, man, it was fun. We'll see you guys soon.
Later, everybody.